Hello, everyone. Welcome to another weekly analysis. First, I will be making a follow up video on what happened last week. You know, on our on our uh, on our direction for the market last week, and then a new video on next week's plans. So, firstly, firstly, Euro USD. On Euro USD, I see that the market, is moving sideways. Now, listen, you need to understand something. There's something I need to understand above all. Listen, there's something you need to understand. But let me take this out so you can see what I'm saying. There's something you need to understand above everything else. It's market structure. Now, market structure is basically the way the market moves. Market structure. So let me take this. Let me take all of these off. 1 minute. You need to understand market structure. You need to see the market for what it is. And not let because before I used to let my lines, my support and resistance tell me where the market is going. I used to let them do that for me. But after I understood market structure, I stopped letting them do that for me. Now, listen, on the weekly time frame, we are still bearish. Because listen, market structure defeats everything else. Market structure is above support and resistance. Market structure is above trend lines. Market structure is above indicators. You need to understand that. So right now, all you have to do is go to the higher time frame because most of you lot, you are stuck on the 1 hour, you're stuck on the 30 minutes, you're stuck on the 15 minutes, trying to get a direction for the market, but it doesn't work that way. Listen, this might as well be a double top right here. We might be putting a double top and then drop, but I cannot say. But what I see is this: I see that the market is still bearish. Why? Lower low, lower high, lower low. All of these are lower highs because the market hasn't broken below this. Rather, the market hasn't closed below this. It hasn't closed below this. This area right here. So it's still very much bearish. Now on the daily time frame, we are still bearish. Why? Because listen, the market moves with precision. The market doesn't move because it wants to move. No, it moves and it closes at a specific price. Now, if you zoom in right here, we can see that the market is still bearish. Why? Because we haven't broken above. Yes, we wicked above, but we haven't closed above. You see what I'm saying to you? We haven't closed above. You see what I'm saying? This price is obviously is lower than this price. We haven't closed above. So for this week, I could say that the market is still bearish. Now, to look for trades, that's the question. Because it's one thing to know the direction of the market. It's one thing to know your entry points. Now, to look for trades, and I'm just gonna put this back in. To look for trades, you should hold on. To look for trades, I have these areas, or rather, we have these levels where we use for particular entries, not just random entries, or rather particular entries. Now, I can see that, or that we can see that, the market is respecting. First of all, respected this level here. We respected again here. We respected here, and we broke in. And what did we do? We respected again. Now the market is violating it. Is not respecting it anymore. Now the most ideal thing is this: whenever your area of interest, whenever your area of interest is being violated. So, for example, this is your area of interest and you're expecting a break obviously of this price and a retest, and then it doesn't give you that push to the downside. So textbook, that's what we all expect in the market to do. Whenever we break a price and then we test it and we're expecting the market to fall. But textbook, that's what everyone's expecting. But whenever that doesn't happen, for example, the market does this lower low, lower high, retest or rather confirms and then does this here and then does this. Now this place is violated. You're not gonna go look for sales from here or here or here. No, the only sales you're looking for, rather, the only time you're looking to trade is when we're below this level. So what would be the most ideal thing for us to do? Wait for another break and wait for a fresh retest, and then to get an entry. This retest right here, if it takes, it has to give you something like this. So we need this. So this is how this is going to play out. So let me show you. If we get an entry, this is how it's going to play out. Like this, lower low, lower high came down, it went up. Now it's violated, right? Now we're expecting a break again, a fresh break to show us, okay, this might just be the time. This might just be the time where this price could hold strong. You know what I'm saying? Could hold strong. So a break, and the market has to do this. You see what I'm saying to you? The market has to give us structure where we can, implement our entry strategies, break of standard trend line, break of loose structure right here, break of structure right here, and then immediately we get a close below sell. It's as easy as that. But not everyone can follow these rules. Not everyone can be patient enough for these rules. That's why you know even when the market breaks above a little bit, we should look for sales. No, we need to sell below. Because I'll give you an example. You see, whenever we're above here, we're buying. Why? Because it's like an equator where if we're above, it's pushing. If we're below, it's pushing. You see what I'm saying to you? So when we're above, why would you be expecting to push downwards when the market is obviously when the equator is obviously pushing us up? You see what I'm saying to you? So we want to implement the same ideology here. We're above, we're pushing up. You see what I'm saying to you? We're above, we're pushing up. We're below it. You see, break, retest, we're pushing down. Look, we're above it. We came above it, retested it, we're pushing up. Textbook. Easy. We broke below it, we tested it, we're pushing down. It's as easy as that. So the market might even come here and then push up. Who knows? I don't know. I don't know. We do not anticipate what the market is going to do in such manner. Instead, we work with what the market gives us. You know what I'm saying? We work with what the market gives us. Because many a times I used to, when I was still, trying to understand, the mechanism behind the market. I'll do this, do this, do this, do this, do this, and I'll wait for it. I'll wait for the market to play out in this exact manner. And when it doesn't play out, you're confused. So all you have to do is just sit, just wait, relax. It's something to listen. The market is going to be here until I don't know when, but the market is going to be here even long after you're gone. So all you have to do is sit on your hands and relax. But a lot of people cannot do that. A lot of people cannot say, "Oh, I'm not going to press a button today." A lot of people cannot say, "I'm not going to look for a trade today." Because why? The market is not giving me favorable market conditions. A lot of people cannot do that. A lot of people cannot do that. So what we have to understand is this: sit on your hands for now. If you're trading Euro USD, sit on your hands for now. Wait for the break, wait for the retest, and then sell. You see what I'm saying? So you wait for the break, retest, and then sell. Just sit on your hands for now. There's nothing there. The market isn't giving us anything to chew on. So why pursue? Why look for what's not there? There's nothing there. Why pursue? So just relax, chill. The market is not going to leave you. You just have to be observant so you don't miss it. Anyway, moving forward. So yeah, that's my breakdown for Euros on the weekly time frame, on daily and the monthly time frame. So we just have to keep an open mind that the market is still bearish. Forget what's happening. Forget. Listen. This is how the market moves. I keep saying the market moves like this. Push. It moves like this. This is how it moves. Like this. You see what I'm saying to you? So look at this and look at this. Push sideways. Push sideways. Push sideways. So you expect look. So you expect the market to fall all the way down like this and not consolidate in the same manner or rather in the same amount of candles like this. No, the market needs to, it's just like a car. When you push the acceleration pedal, it's gonna go, it's gonna recombobulate, and then it's gonna go again. You see what I'm saying to you? So it needs to recombobulate. It needs to revive itself around here. So let it revive itself. If the market wants to break and keep going up, no problem. We're here to do what the market says. We're not here to tell the market what to do. You need to understand that we're here to do whatever the market tells us to do. We're not here to let them to tell the market what to do. So imagine you're telling the market, "Oh, give me money today." No, it's not going to do that for you. You need to wait. We need to wait. Euro USD. If you trade top down analysis, if you trade from the highest time frame, monthly time frame, you need to wait. So that's on CAD JPY. On CAD JPY, CAD JPY looks good. Listen. There's something I'll tell you. I do not trade every pair, but one thing I do is I make sure if I'm trading a pair that's not a dollar pair or that's not in my range of that's not in my purview, what I'll do is I'll make sure that pair falls into the criteria for me to take a trade. The monthly time frame has to be in sync with the weekly and the daily time frame. Car JPY, I keep hitting. Car JPY is the only pair on this channel that we've made money with, like what, 3 times now. So I'm in a trade on Car JPY right now. This is the third time I'm trading Car JPY. So I'll tell you how. So the weekly time frame was still bearish. How do I know that? Higher high, higher low, higher high, lower low, lower high. We're still bearish. We haven't created the lower low yet. This is not a lower low. You understand what I'm saying? We haven't created a lower low yet. Or my apologies. This is a lower low. Yeah. So because why? Because the market closed below. Yeah, the market closed below. Not the market closed below because this is where the market closed. Because the reason why we have colors on these candles are not just for fancy or not just for decorations. The colors help us know which is the bullish candle and which is the bearish candle. You see what I'm saying to you? So if when you see colors like this, a great color going up like this, yes, it's a bullish momentum. When you see a red one coming down, it's bearish. So the same thing applies here. Red candle is coming down, and then the green one is obviously going up. But you need to understand something. Market close. Market close is very important. So the market close here, we're way below this last low. So lower low, lower high. The market came and put in a lower low here. Now, on the weekly time frame, for us to be bullish, we have to break this structure right here. We have to close above this structure right here. The market has to close above here. Then the weekly time frame is bullish, and then this pair becomes invalid for us. But for now, the pair is very, very much valid. So on card JPY, if you're looking to enter, the market is the daily time frame is still bearish. I'll show you lower low, lower high, right? A lower low. Now, don't forget candle close, because for the past 2 weeks, rather the market has been giving us irregular candle formations. So lower low, lower high. It came and put in a lower low right here, and then it put in a lower high right here. Now the market hasn't given us a lower low yet, because why? We closed below here. So now it's putting out a lower high right here. So there's something I'll tell you now. There are little tricks to the market. The market isn't just A, B, C, and D. No, it's A, A1, A2, B, B1, B2. You see what I'm saying to you? So you see this push, this momentum to the upside. Now, there's something else I'll show you. When the market does this, this huge push to the downside, you know, it needs to reduce momentum. You understand what I'm saying? So say you're having a retest and the retest is giving you huge candles, or rather it's giving you momentum candles. Now, candles that show momentum are, bullish candles. You see what I'm saying? But candles that show the market is slowing down, candles that tell you the market is slowing down, dojis. What's a doji? This is a doji. You see what I'm saying? Candles that have small bodies, candles that look small to the eye. Yeah, those are doji. So for instance, this is the doji, small body candle. Doji, these are small body candles. Doji, small body candles. You see what I'm saying? These are Marubuzu candles without wicks, just huge candles, huge candles. You see what I'm saying? So you have to implement the same ideology here right now. Now, remember when I said before that the market moves like this, it has to recombobulate, it has to resettle itself before it moves again. So the exact same thing happens here. You know, the market has pushed to the upside. What do you think it's gonna do? It's gonna have to gather around. It's gonna have to slow itself down because it's pushing and it has to slow down. The market is not just gonna do this boom boom. No, it has to go up, slow down, and then push. Now I'll show you for example. Look to the left side, right? You see this push to the upside. You see this small body candle. When I saw this, the first time I took this trade, when I saw this candle finish on the daily time frame, I was like, perfect, because I know that the next candle is going to be a bearish candle. Why? Because we're already done. What the market is tired of going up. The market is tired. When I saw this candle, I knew, okay, boom, the market is tired of going up. Now it's gonna what? It's gonna drop. And what did it do? It dropped, and I took the trade. So if you look to the left hand side, now I took this trade when the market was still forming this candle. You know what I'm saying? I didn't wait for the market to form this breaking candle, this slowing down candle, because I already had my entry confirmation on the 4 hour time frame or the 1 hour time frame. So what we're expecting now for the market to do is maybe come up. We do not know that, but maybe come up. But I do not care if it comes up anyway. But we're expecting the market to fall all the way to this price right here, because you can see now the market has done the exact same thing it did here. It pushed. You can see if you see this, if you look now, this candle, even though it's red, it looks almost similar to this candle. You understand what I'm saying? This candle right here looks almost similar to this candle. A rejection, a small body, and we're expecting the next candle to be a push. So from next week, we're expecting the next candle to be a push. So basically, if you get the bearish engulfing from here, engulfing this whole candle right here is going to be an evening star. You know, so that's the plan for CAD that's the plan for next week, obviously, because I already have my plans situated in my journal for next week. Because I'll show you how I was able to get in a quick entry. Now, Before our time from now, I remember when I said that to be able to get in a trade from the 1 hour or the 4 hour, it has to be bearish. In this case, we are bearish, so the entry time frame has to be bearish. The 4 hour is still bullish, even though we've broken candlestick pattern, even rather counter trend line, even though we've broken structure, from the reversal pattern right here, double top, broken the neckline, it's still bearish. Why? Because I take market structure above everything. This is how I trade that. Market structure comes first, chart pattern comes next, then support and resistance. You see what I'm saying to you? So in this case, what I'm going to look at first is market structure. We're still bearish. Why? Higher high, higher low, higher high. This is still a higher high because we didn't close above this level right here. All we did was put in a double top right here. But for us to be able to get in a clean entry, we need a break of this structure right here, and then a retest of this page, and then we sell. But I didn't use the 4 hour. I used the 1 hour because there are two time frames. You can use either the 1 hour or the 4 hour. You can use both time frames. Now, see what I'm saying on the 4 hour? It happened on the 1 hour. I'll show you. Now you can see higher high, higher low, higher high, higher low, higher high. You can see this high is slightly above this high right here. So when I saw this happen, when I saw that the market had slightly gone above this high right here, and then it broke this inner push that gave us the break of structure right here, that gave us the higher high. In fact, when I saw this Marubuzu candle, I already knew it was over. I already knew the market was ready to fall on the 1 hour time frame because why? We've already broken chart pattern, we've already broken market structure, and then we've come to break what counter trend line. Everything just has to fall into formation. Everything has to fall into formation for me. It's not just going to be based off of feeling or what somebody else is saying. Everything has to fall into formation. So if you look to the left right now, you can see that I was waiting for this low right here to be broken. This was how I had my line. I was waiting for this low right here to be broken. We broke it. We came outside. We came outside, a long time ago. We came outside like hours ago. But it wasn't ready for me until I saw that the market had already broken this line right here. And when I saw that it finished here, all I had to do was execute stop loss right above here, and then I'm expecting the market to fall all the way down here. It's a 3-1. So now you see what I was saying. The market has fallen, right? It's gonna consolidate, it's gonna fall. So exactly what I keep saying it. I keep saying it. It happens as I keep saying it. Look, that's falling, right? It's gonna consolidate. It's gonna do this. It's gonna recombobulate and then drop again. And it's gonna relax, settle, and then drop again. Now, if you understand market structure, this is the way for you to get into the next trade. So for example, all you have to do is wait for the market to exhaust itself around this level, and then wait for a break of this consolidation right here. The break of this consolidation right here, you have to take it all the way to the week, all the way to the week. The break of this consolidation right here, a body close below right here, and then stop loss right above, and then you aim all the way to the left to the downside. It's as easy as that. Now, is it risky? Yes. Would I take a trade like that? No, because I've already gotten in, the way I would get in. You see what I'm saying to you? I've already gotten into the trade the way I would get in normally. So would I, come and take additional risk here? No, that's not how I trade. So, but if you want to get in, this is how you can get in. I'll show you right here. If you're interested in getting in, all you have to do is this: wait for the market to break this low right here, this low. Wait for it to close below this low, and then set a sell limit right here, stop loss right above here, above the last high, and then take profits right here. It's as easy as that. It's as easy as that. So I would make a new video on the plans for a next week analysis. Make a video on what you could anticipate, what pairs you could wait for. So like, subscribe, and then comment and tell me what pairs you want me to to give an analysis on. So see you lot later. Bye.